first question is an important one, especially for anybody who's thinking about getting a mortgage now or in the future, and you've had problems because the mortgage rates are a little higher than you want, or maybe a little more than a little higher, maybe a lot higher. Jeannie sent us an email. She heard us talk about a buy down of a mortgage in this email. She's asking, so Randy Rocky at Swan Financial, what is a buy down?
Yeah.
How does it work? And then talk about this buy down that you've talked about.
Yeah.
I think it's a perfect opportunity to talk about that.
Yeah. So NMLS number 26362. So what we are doing, and it's really been really well received, actually even better than I thought. So you can get right now 4.75% as affected today's date, and a 5.9396 APR rate of 4.75 30-year fixed rate. And what it is right now, it's about a 2.2% buy down on with FHA is the buy down, and all the closing together with everything, you're looking around 19 or 20,000 on a $284,000 loan.
The buy down means you're going to pay money up front to bring the interest rate down, right?
2.2% in this scenario I told you.
Okay, so you're bringing it down from what's the current going interest? I know you've already mentioned your MNL.
Right. It's mid sixes, six and a half.
So mid 6.5. Let's say. So by 2 point something, you're bringing it down to either 4 or a little higher than 4. Am I right about that?
4.75.
All right, 4.75.
30-year fixed.
Now, to get that 4.75, the buyer has to ask the seller to pay, and I think you mentioned $19,000 or $20,000.
Well, that's with all the closing costs and prepaid.
Okay, total.
The 3.5% down payment required on FHA, everything. So I just wanted to kind of give them a rough number minus whatever the seller concessions were. So all right, I know that maybe I shouldn't have got into all that.
That's fine. It's perfectly fine. So now, let's spell it out here. So many buyers are going to say, whoa. The seller's going to pay $20,000 on my, I'm just rounding it up, $20,000 on my closing costs.
No, they're not paying that.
Right. So explain why they're not paying that.
Right. So in other words, well, the buyer in that situation can pay for that.
Or part of it. Got it.
Or all of it.
Right.
They can pay all of that. Okay. But just to have it where they don't have as much money to the closing table, if we can on the example I just gave, the $284,000 example,
right?
If they can help them pay $12,000 of that, now all of a sudden they're just basically bringing pretty much their down payment, which is 3.5%.
Right.
So then you're only bringing $8,000 or $9,000 to the closing table altogether.
All right, but then the people listening right now, the sellers who are listening to us go, I'm not going to be paying $12,000. But here's what you can do. Right.
Yes.
You can increase the price of your home by $12,000 to cover that. Now, there's only one negative. Greg, you want to explain what the negative is on that?
Well, I mean, aside from the home having to appraise,
right,
and possible multiple buyers in the market, and a market that is still, in most price points, a seller's market. I would exclude the caveat of the luxury market. That's rapidly shifting. But you know, it's a great product out there.
There's two things of understanding that. All right, we could do an appraisal gap. All right, so what you're doing and what we have had a tremendous amount of success with in that scenario. Let's look at a $284,000. You tell the buyer that, hey, we're going to go out at $296,000 on this property. We're going to have $12,000 to help with closing costs and prepaids and to buy down the rate, so they have a net less payment. If the appraisal comes in at 284 or anything in between that, then what we can do is we can shift that off of the seller, and very simply, then the buyer's either got to bring more money to the closing table to get the lower rate, or they have a little higher rate and a little higher payment. And and it's a great conversation to have.
It is. We'll follow up on this, but let's keep going because it's only a half-hour show, folks.
Yeah.